Today we are going to talk about Bybit dual asset. So the dual asset is a short-term speculation vehicle that lets you capitalize on small price movements in the market. All you have to do is predict the direction of a given crypto asset such as BTC, ETH or BIT within a preset time frame. Upon maturity, your returns will be in the form of either USDT or your chosen crypto asset, depending upon the outcome of your trade. Why deposit in Bybit dual asset? So benefits: the yield enhancement. Users will earn an enhanced return if their review of the market direction is accurate. Ideal for crypto asset hodlers, especially of USDT, BTC, ETH, BIT, and other popular altcoins, who seek to accumulate more of their chosen cryptocurrencies to potentially increase their crypto holdings or take profit in the form of crypto. Short tenor. Shorter deposit period gives you the flexibility to manage your assets as you desire. Dual asset might be a good fit for you if you are comfortable receiving yield in either USDT or alternate crypto assets. You wish to earn potentially higher yields and accumulate alternate crypto assets in a downturn market. You wish to make a quick, fast, free, and simple swing trade in an uptrend market. You predict little price movement between the two crypto assets of your chosen dual asset product. So how does the dual asset work? So the returns for dual asset can be either in the same asset or a different one depending on two key factors: settlement price and benchmark price. Settlement price: the spot price of the coin quoted in USDT when your chosen product plan ends. This is derived from Bybit's index price weighted average of spot price across several exchanges in the last 30 minutes before settlement. Then the benchmark price is the spot price of the coin quoted in USDT when your chosen product plan starts. Is derived from Bybit's index price weighted average of spot price across several exchanges 5 minutes after your order is successfully processed. When the settlement price for the underlying asset, which is predominantly a crypto asset, goes above the benchmark price, both principal and yield will be converted to stablecoins. This essentially sells off your crypto asset at a higher value, earning you more stablecoins due to the high yield. When the settlement price for the underlying asset goes below the benchmark price, you will receive the equivalent of your deposited crypto asset and yield in the form of the crypto asset. This will earn you more crypto assets than you originally deposited. As you can see, the asset price and benchmark price. So if the benchmark price is greater than the settlement price, you receive the principal and yield in assets and in yield in USDT. And if the benchmark price is less than settlement price, less than or equal to the amount price, you receive the principal and yield in crypto assets. So the dual asset can be found by going to the Bybit main website, go to the end and click on dual assets. So as you can see, dual asset, you also have a video showing and explain what a dual asset is. Then dual assets, maximum returns in low volatility markets. Alright, so some of the product plans are Ethereum USDT. So the high API rate for 3 days. BNB, you can see the IPA for 1 day, 2 days, and 5 days. The FTT is USDT, Tron, Clay. So these are the dual assets that you can earn like either in USDT or the underlying crypto asset from. Okay. So either way, the dual asset allows you to earn a high yield on your asset, no matter which direction the settlement price is headed. So some other factors to take into consideration when partaking of dual asset are as follows. Product pairing. Currently, Bybit offers 21 dual asset product pairings, including Ethereum USDT, BTC USDT, BitUSDT, and more. Deposit asset. Your chosen crypto asset that you wish to deposit. Deposit amount, deposit period, and annual percentage yield. This yield is different for every dual asset product pairing, so be sure to select the one you desire. Estimated benchmark price that you might be entering. So the dual asset USDT, the proceeds and the settlement is less than the benchmark price. You can see the calculations for the deposit amount over benchmark price multiplied by 1 plus API divided by 365 times duration. Then the settlement price, if it's greater than or equal to the benchmark price, it goes to the calculation deposit amount times into bracket 1 plus APY over 365 times duration. The rewards, you receive the assets such as BTC, Ethereum, and Bit upon settlement, when the settlement price is less than the benchmark price. Then if the settlement price is greater than the benchmark price, you receive USDT upon settlement. So deposit as a BTC, Ethereum, Bit, and others. So if the settlement price is less than benchmark price, the calculation is deposit times into bracket 1 plus APY over 265 times duration. And when the settlement price is greater than or equals to benchmark price, the deposit amount times benchmark price times into bracket 1 plus the APY over 265 times duration. So the rewards, if the settlement price is less than benchmark price, you receive assets such as BTC, ETH, and Bit upon settlement. And for the rewards, when the settlement price is greater than or equals to benchmark price, you receive USDT upon settlement. So the duration is either 1, 3, or 5 days. So based on the settlement rules above, let's illustrate with some examples. So deposit asset is USDT. Let's assume that trader A uses 4,000 USDT to purchase a 1-day asset product with 200% APY. The benchmark price is 3,900. 1 day later, one of two scenarios will take place. Scenario A, the ETH settlement price is below 3,900 with a return of 300% APY. Trader A will receive 1.03407 ETH as the settlement price. So the proceeds is equal to deposit amount over benchmark price times into bracket 1 plus APY over 265 times duration. So that will be 4,000 over 3,900 times into bracket 1 plus 3.00 over 365 times 1, which is equals 1.034078. Scenario B, the each settlement price is above or equal to 3,900. So trader A will receive a principal of 4,000 USDT and a return of 300% APY, which adds up to 4,032.87 USDT. So the proceeds is equals to deposit amount times into bracket 1 plus APY over 365 times duration. So that will be 4,000 times into bracket 1 plus 3.00 over 365 times 1, which equals to 4,032.87 USDT. So if the trader had intended to convert some of their USDT to each, they would have achieved that with a high yield in scenario A. However, if the trader is betting for the underlying asset settlement price to go above the benchmark price, they would receive more USDT with the high yield in scenario B. To deposit it, let's say that trader A now uses 1 ETH to purchase a 1-day dual asset product. The current ETH reference spot price is $4,000 and the APY is 300%. The benchmark price is 3,900. 1 day later, one of two scenarios will take place. Scenario C, the ETH settlement price is below 3,900. Trader A will receive a principal of 1 ETH and a return rev at 300% APY, which is 1.00821 ETH. The process will be equals to dual amount times into bracket 1 plus APY over 365 times duration. So 1 times into bracket 1 plus 3.00 over 365 times 1, which is equals to 1.00821. Scenario D, the ETH settlement price is above or equal to 3,900. The deposited 1 ETH will be converted into 3,900 USDT plus a return with a 300% APY, which is 3,932.05 USDT. Process is equal to deposit amount times benchmark price times into bracket 1 plus APY over 265 times duration. So 1 times 3,900 times into bracket 1 plus 3.00 over 365 times 1 equals 3,932.05 USDT. So holders of BTC, if Bit can hedge the volatility of their crypto assets when the settlement price of the crypto assets goes below the benchmark price, they can gain more assets in return for what they originally deposited. When the settlement price is above the benchmark price, traders can cash out their deposited crypto assets alongside a high yield in USDT. So who should deposit in Bybit dual asset? So the dual asset is a trading tool that allows you to capitalize on price movements in low volatility markets. It provides a higher yield and the short deposit period is flexible. High yield does bear higher risk. However, users have the liberty to decide how they feel about the current market and to deposit accordingly. We can help you secure a high yield for your asset today, whether the market moves with or against your forecast. If you have crypto assets or stable coins sitting idly in your account, why not deposit in dual assets, either to gain more crypto assets or earn profit in stable coins? Either way, a high return on your assets is guaranteed. So here are the risks involved. The return in asset value is not guaranteed due to price into bracket value fluctuations. In the event of adverse market movements, your returns in settlement asset may be less than your original deposit asset upon maturity. So top 5 tips to maximize Bybit dual assets. For a new and improved product structure, we've made dual assets simpler than ever. However, we still encourage users to do their own research in forecasting the movement of the coin's price. So when to use dual assets? So bullish market. In the bullish market, it is highly probable that the settlement price will go above the benchmark price. The price of the coin will either begin or continue to climb each day. In such a scenario, depositing USDT is appropriate as you stand to gain more USDT in return. If you were to deposit BTC, it or bet your coins will be converted to USDT based on benchmark price plus return yield. Even though you've lost out on the increment of BTC, it bet price on the T plus 1. If your intention was to yield, cash them out on the T, you have achieved that with an additional yield. Bearish market. In a bearish market, the price of the coin is in a downward trend. Whether you deposit BTC, ETH, BIT or USDT, your returns will be in other crypto assets apart from stable coins. This will allow you to gain more coins with yield. Even if the price of the coins takes a downturn, the accumulated coins can be used for trading or hodling as a store of value to appreciate. The earlier you deposit, the higher the APY. If every new plan is released, we strongly encourage users to deposit early. The earlier you deposit, the higher the APY to which you are entitled. The APY will be refreshed every 5 minutes. Once the plan is submitted, you can be sure that you've logged in the APY. However, since the APY is refreshed every 5 minutes, there could be a slight discrepancy if the yield at the 5-minute mark differs from that at the time the user submitted the order. Please note that new plans are released every day at 10 a.m. UTC. Benchmark price is updated every 5 minutes. With the benchmark price being updated every 5 minutes, you can now enter dual asset with peace of mind. Referencing the estimated benchmark price, decide which coins you'd like to deposit in order to gain your desired outcome. The estimated benchmark price will help you decide the price at which you are submitting your order. However, do you note that the benchmark price is only an estimate? The actual benchmark price will be determined 5 minutes after your order has been successfully submitted. Dual asset can be used to replace a conditional order. So the dual asset can be considered a superior placement to a conditional order when you are looking to realize a profit from a coin, or if you want to set a target price at which to buy. On days when you are like to profit from a coin, instead of placing a conditional order to sell off your coins, you can deposit them with dual assets. So this will give you a high APY along with what you could have received if you had sold your coins via conditional order. In a downturn, while the settlement price falls below the benchmark price, you stand to gain more coins in return and will be better off using dual assets compared to setting a target price to buy in via a conditional order. This is because the returns in coins is also paired with a high APY. the proceeds calculator. So the estimated proceeds can be calculated on the order page and are based on estimated APY and benchmark price. This will give you a sense of what you'll be receiving in either settlement scenario. So this is how it looks like when you are calculating the proceeds, as if it's a bit order or BTC order. Okay, so that's it for dual asset.